Joining us now is Michael Baker, D.A. Davidson Senior Research Analyst. Before we get there, Michael, what a picture. So Kohl's is down 25%, Foot Locker is up 28%. What are we gleaning about the consumer right now?
Two things I'd say. One, to us, the consumer sales and spending is slowing. Best Buy, the stock is up, but as Dom said, they did miss sales, and just some of the monthly retail sales numbers we get. We are seeing a slowdown. Year-over-year growth in retail sales has been about 3% or so year to date. That's below the pre-pandemic average, which is usually in the low fours. A lot of moving parts between the late tax refunds, the early Easter, the leap day, et cetera, weather. But generally speaking, we are seeing a slowdown in consumer spending. What it tells you about the stocks is it's a stock picker's market. I mean, those moves are pretty variable and a lot up, a lot down. Even this morning, as I look at my list here, we had 4 companies miss on sales, 3 companies beat on sales. It's really sort of all over the place.
And Dave and I were talking about execution. I mean, it really comes down to who is understanding their consumer right now. We saw that with Abercrombie, for instance, in a big way. So how do you pick the winners?
Yeah, it's a great point, and a lot of it is execution. Best Buy, perfect example today. Again, missed on sales, but they beat on margins. Gross margin, much better. That's execution. They're starting to advertise and promote a little bit more. That's leading to a better sales trend in May versus where they ended the quarter. Even with that increased promotional activity, they were able to say that they're going to be at the high end of their profit guidance for the year. So that's all about execution. So in a lot of ways, you're betting on the management teams, as you said, who can figure out how to manage through this environment. Another name yesterday, Dick's Sporting Goods, really strong execution, been one of our top ideas. And we're seeing them just navigate this tricky environment by taking market share and growing margins.
There's going to be more. Costco, Lulu, Ulta after the bell. Where's the opportunity, given some of the size of these moves? Which one would you bet on?
Yeah, a name we like is Ulta, actually. We see it as a best-in-class retailer. We have a term that we use here at D.A. Davidson called best-in-breed bison. It's really our top long-term ideas. We would put Ulta there. And the stock has underperformed year-to-date, as you see there. It is now the cheapest name in our space on a PE basis, except for Best Buy, which always trades at a discount. So the multiple is really compressed. We think that's an opportunity. We get that they've lost a little bit of market share this year to Sephora, but we think that's well known in the valuation. And in fact, we think that Sephora headwind sort of levels off now. Sephora built a lot of stores in Kohl's over the past year. You're now starting to cycle against that. We think those market share losses sort of even out. And you're left with the name trading at 14 times, far below its historical averages. And so we think that's an opportunity.
Okay, we'll check in with you then after the report, pounding the table on Ulta there. Michael, thank you. Michael Baker.